China's zero-tariff bombshell, Africa's golden era or global trap. Breaking news that'll shake the globe. As of today, June 19, 2025, China has obliterated tariffs on goods from all 53 African nations, unlocking the world's biggest market for Africa's cocoa, coffee, fashion, and more. This isn't just a minor adjustment to trade agreements, it's a seismic shift that has the potential to redefine global economics and reshape the relationship between Africa and China. The implications are far-reaching, touching everything from local farming communities to international investment strategies. We're talking about a complete overhaul of the existing trade landscape, a move so bold that it demands a closer look. What exactly does this mean for African producers? How will it impact Chinese consumers? And what are the potential pitfalls hidden beneath the surface of this seemingly generous offer? These are the questions we'll be tackling today. This could be the continent's economic revolution, or a cunning trap. Welcome to Mwaki Insights, where we dig into the raw truth behind China's boldest move yet. We're not just going to regurgitate headlines, we're going to dissect the details, analyze the data, and hear from the experts on the ground. We'll explore the potential benefits for African nations, examining how this zero-tariff policy could stimulate economic growth, create jobs, and boost local industries. But we'll also delve into the potential risks, considering the possibility of increased dependency on China, the impact on local competition, and the long-term sustainability of this trade relationship. Is this a genuine act of economic partnership, or is there a more strategic agenda at play? Join us as we navigate the complexities of this groundbreaking development and uncover the truth behind China's ambitious plan. Hit subscribe, ring that bell, and join us as we unravel this game-changing moment, because you won't want to miss the fallout. We'll be bringing you exclusive interviews with economists, trade experts, and policymakers from both Africa and China, providing you with a comprehensive understanding of the forces at work. We'll also be examining case studies of specific industries and regions, highlighting the real-world impact of this zero-tariff policy. From the cocoa farmers of Ghana to the textile manufacturers of Nigeria, we'll be sharing the stories of the people who are directly affected by this historic decision. And we'll be keeping a close eye on the political and social implications, exploring how this trade agreement could reshape the geopolitical landscape of Africa and beyond. So, buckle up and get ready for a deep dive into one of the most significant economic developments of our time. China's zero-tariff shockwave, Africa's big win or hidden trap. This isn't just about economics, it's about power, influence, and the future of global trade. The removal of tariffs represents a monumental shift in the dynamics between these two continents, potentially rewriting the rules of engagement for international commerce. We need to ask ourselves, what are the long-term consequences of this decision? Will it lead to a more equitable distribution of wealth and opportunity, or will it exacerbate existing inequalities? Will it foster sustainable development and economic diversification, or will it create a new form of dependency? These are critical questions that demand careful consideration, and we're here to provide you with the insights and analysis you need to make informed decisions. Watch as Ethiopian coffee farmers harvest beans, Nigerian fashion designers create vibrant prints, and Chinese shoppers buy African goods. This is the human face of this trade agreement, the individuals whose livelihoods are directly impacted by this policy shift. We'll be showcasing the stories of these entrepreneurs, artisans, and farmers, highlighting their successes, their challenges, and their hopes for the future. We'll see how the removal of tariffs is opening up new opportunities for them to access the Chinese market, expand their businesses, and improve their living standards. But we'll also be examining the potential risks they face, such as increased competition from larger companies, fluctuations in commodity prices, and the need to adapt to changing consumer preferences. Their experiences offer a valuable perspective on the real-world impact of this zero-tariff policy, and we're committed to bringing their voices to the forefront. This is the moment trade changed forever. The FOCAC 2025 meeting in Changsha marked a turning point in the relationship between Africa and China, a moment when the foundations were laid for a new era of economic cooperation. The signing of these trade agreements represents a commitment from both sides to deepen their partnership and foster mutual prosperity. But the true test of this agreement will be in its implementation, in the ability of both sides to translate these promises into tangible results. We'll be tracking the progress of this agreement closely, monitoring its impact on trade flows, investment patterns, and economic growth. And will be holding both sides accountable for fulfilling their commitments and ensuring that this partnership benefits all stakeholders. 53 nations, 0% tariffs. The world is watching. This is a bold experiment in international trade, a test case for a new model of economic cooperation. The eyes of the world are on Africa and China as they navigate the complexities of this ambitious agreement. Will it succeed in creating a more equitable and sustainable trading relationship? Will it serve as a model for other developing countries seeking to diversify their economies and access global markets? Or will it fall victim to the challenges of implementation, the pressures of competition, and the competing interests of different stakeholders? The answers to these questions will have profound implications for the future of global trade and development. Over $300 billion in trade potential, with African products ready to flood the Chinese market. This is the scale of the opportunity, the potential for African businesses to tap into the vast consumer market of China. But realizing this potential will require more than just the removal of tariffs. It will require investments in infrastructure, improvements in logistics, and the development of strong brands that can compete in the global marketplace. It will also require a commitment to quality, innovation, and sustainability. African businesses must be prepared to meet the demands of Chinese consumers, to adapt to their preferences, and to build long-term relationships based on trust and mutual respect. The rewards are significant, but the challenges are also considerable. June 19th, 2025. The day trade changed. A day that will be remembered as a pivotal moment in the history of Africa-China relations. A day that could potentially reshape the global economic order. But the true significance of this day will only be revealed in the years to come as we witness the long-term impact of this zero-tariff policy. Will it usher in a new era of prosperity and partnership, or will it lead to unforeseen consequences and unintended outcomes? Only time will tell. But one thing is certain, the world will be watching closely as this story unfolds. And we'll be here to provide you with the insights, analysis, and perspectives you need to understand the implications of this game-changing moment. Imagine a world reshaped by trade, a world where the economic landscape is dramatically altered. Picture this. As of June 19th, 2025, a pivotal moment arrives. China's Changsha Declaration, a landmark agreement stemming from the Forum on China-Africa Cooperation, FOCAC, has completely eliminated tariffs on every single product originating from Africa's 53 nations. This is a monumental leap from the previous arrangement, which only included 33 of the continent's least developed countries, LDCs. We're not talking about a minor adjustment or a slight policy change here. This isn't a small tweak, it's a trade tsunami. It's a seismic shift in global commerce, a game changer that promises to unlock unprecedented opportunities for African businesses and consumers alike. This declaration signifies a profound commitment to fostering stronger economic ties between China and Africa, paving the way for a new era of collaboration and prosperity. The implications are far-reaching, impacting industries across the board and potentially reshaping the balance of power in the global marketplace. This isn't just about removing barriers. It's about building bridges and creating a level playing field where African entrepreneurs can thrive and compete on a global scale. The removal of tariffs opens up a vast array of possibilities, allowing African businesses to access the massive Chinese market with greater ease and affordability. This, in turn, can lead to increased production, job creation, and overall economic growth across the African continent. The Changsha Declaration represents a bold step towards a more equitable and interconnected world, where trade serves as a catalyst for development and shared prosperity. It's a testament to the power of international cooperation and a beacon of hope for a future where economic opportunities are more widely distributed. Consider the implications for Ghana, a nation renowned for its rich cocoa production. Ghana's cocoa farmers, the backbone of the country's agricultural sector, can now flood China's massive $100 billion confectionery market. This is an extraordinary opportunity for Ghanaian farmers to expand their reach, increase their profits, and contribute to the growth of their national economy. Imagine the impact on local communities, as increased demand for cocoa beans translates into more jobs, better infrastructure, and improved living standards. The removal of tariffs eliminates a significant barrier to entry, allowing Ghanaian cocoa farmers to compete more effectively with other global suppliers. This newfound access to the Chinese market can lead to a surge in exports, boosting Ghana's foreign exchange earnings and strengthening its position as a major player in the global cocoa trade. The potential benefits extend beyond the agricultural sector, as increased trade can stimulate growth in related industries such as transportation, packaging, and marketing. This ripple effect can create a more diversified and resilient economy, capable of withstanding external shocks and adapting to changing market conditions. The prospect of flooding the Chinese confectionery market is not just a dream, it's a tangible reality that is now within reach for Ghanaian cocoa farmers. This is a moment of great promise and opportunity, a chance to transform the lives of countless individuals and communities across Ghana. Now let's turn our attention to Nigeria, a vibrant nation brimming with creativity and entrepreneurial spirit. Nigeria's fashion designers, think Ankara prints, those bold and beautiful textiles that capture the essence of African culture, are poised to take the global stage, hitting Alibaba and other major Chinese e-commerce platforms with unprecedented force. These talented designers, who have long been celebrated for their innovative designs and craftsmanship, are now able to scale their businesses globally, reaching a vast and eager audience in China. The removal of tariffs eliminates a major obstacle, making it more affordable and accessible for Chinese consumers to purchase Nigerian fashion products. This can lead to a surge in demand, creating new opportunities for Nigerian designers to expand their production, hire more staff, and invest in their businesses. The impact extends beyond the fashion industry, as increased trade can promote cultural exchange and understanding between Nigeria and China. As Chinese consumers embrace Ankara prints and other Nigerian designs, they gain a deeper appreciation for African culture and creativity. This can foster stronger relationships between the two countries, paving the way for further collaboration in other areas such as education, tourism, and technology. The prospect of Nigerian fashion designers scaling globally is not just a pipe dream, it's a tangible reality that is now within reach. This is a moment of great excitement and opportunity, a chance for Nigerian designers to showcase their talent to the world and contribute to the growth of their national economy. Consider the aromatic allure of Ethiopian coffee, renowned for its distinctive flavor and rich heritage. Ethiopia's coffee, a national treasure and a source of immense pride, could potentially rival Starbucks in Beijing and other major Chinese cities. This is not just a fanciful notion, it's a realistic possibility, given the growing demand for specialty coffee in China and the unique qualities of Ethiopian beans. The removal of tariffs eliminates a significant barrier to entry, making it more affordable for Chinese consumers to enjoy Ethiopian coffee. This can lead to a surge in demand, creating new opportunities for Ethiopian coffee farmers and exporters to expand their reach and increase their profits. Imagine the impact on local communities, as increased demand for Ethiopian coffee translates into more jobs, better infrastructure, and improved living standards. The prospect of Ethiopian coffee rivaling Starbucks in Beijing is not just about competition, it's about offering Chinese consumers a wider range of choices and introducing them to the unique flavors and traditions of Ethiopia. This can foster cultural exchange and understanding as people from different backgrounds come together to share a common love for coffee. The potential benefits extend beyond the coffee industry, as increased trade can stimulate growth in related sectors such as tourism, hospitality, and retail. This ripple effect can create a more diversified and resilient economy, capable of withstanding external shocks and adapting to changing market conditions. Now, let's delve into the critical role of the Democratic Republic of Congo, DRC, in the global transition to electric vehicles. DRC's minerals, particularly cobalt and lithium, are essential components in the production of electric vehicle batteries. These vital resources might very well power China's EV boom, fueling the growth of the world's largest electric vehicle market. As China continues to invest heavily in electric vehicle technology, the demand for DRC's minerals is expected to soar. The removal of tariffs eliminates a significant barrier to trade, making it more affordable for Chinese manufacturers to import these essential resources. This can lead to increased investment in the DRC's mining sector, creating new jobs and stimulating economic growth. However, it's crucial to ensure that this growth is sustainable and equitable, benefiting the Congolese people and protecting the environment. The DRC has the potential to become a major player in the global electric vehicle supply chain. but it must manage its resources responsibly and ensure that its citizens benefit from the economic opportunities that arise. This requires strong governance, transparency, and a commitment to sustainable development. The prospect of DRC's minerals powering China's EV boom is not just about economic growth, it's about contributing to a cleaner and more sustainable future. As the world transitions away from fossil fuels, electric vehicles will play an increasingly important role in reducing carbon emissions and mitigating climate change. The DRC has the opportunity to be at the forefront of this revolution, providing the essential resources that will power the next generation of transportation. Let's emphasize the key takeaway: 100% of tariff lines eliminated. This is not a partial reduction or a gradual phase-out. It's a complete and immediate removal of all tariffs on goods traded between Africa and China. This landmark decision takes effect in June 2025, marking a new chapter in the economic relationship between the two regions. The implications are far-reaching, impacting a wide range of industries and sectors. From agriculture to manufacturing, from fashion to technology, African businesses will have unprecedented access to the Chinese market. This is a game-changer that promises to unlock new opportunities for growth, innovation, and prosperity. The elimination of tariffs is not just about reducing costs. It's about creating a level playing field where African businesses can compete on a global scale. This can lead to increased investment, job creation, and overall economic development across the African continent. The June 2025 deadline is fast approaching, and African businesses need to prepare themselves to take advantage of this historic opportunity. This requires strategic planning, investment in infrastructure, and a commitment to quality and innovation. The future is bright, and the possibilities are endless. Consider the current state of trade between Africa and China. With 2024 exports already reaching an impressive $298 billion, the economic ties between the two regions are already strong and growing. However, the elimination of tariffs has the potential to unlock even greater growth, pushing trade past the $300 billion mark and beyond. This is not just a symbolic milestone. It represents a significant increase in economic activity, creating new opportunities for businesses and consumers alike. The potential for growth is immense, and the benefits will be felt across a wide range of industries and sectors. From agriculture to manufacturing, from fashion to technology, African businesses will have unprecedented access to the Chinese market. This can lead to increased investment, job creation, and overall economic development across the African continent. The elimination of tariffs is a catalyst for growth, creating a more level playing field and fostering greater competition. This will encourage innovation, improve efficiency, and drive down prices, benefiting consumers in both Africa and China. The future is bright, and the possibilities are endless. With the right policies and investments, trade between Africa and China can continue to grow and prosper, creating a more prosperous and interconnected world. To all the innovators, the creators, the risk-takers, and the dreamers across the African continent, entrepreneurs, this is your moment. This is your chance to seize the opportunities that lie before you and build a brighter future for yourselves, your communities, and your nations. The elimination of tariffs has opened up a world of possibilities, and it's up to you to take advantage of them. Share this with every creator you know. Spread the word, inspire others, and let's work together to build a more prosperous and interconnected world. This is not just about individual success, it's about collective progress. By working together, we can create a more vibrant and dynamic economy that benefits everyone. The future is in your hands, and the possibilities are endless. So go out there, take risks, and make your dreams a reality. The world is waiting to see what you can achieve. This is your time to shine. On the surface, the recent zero-tariff agreement between China and several African nations seems like a golden opportunity, a gateway to unprecedented economic growth and collaboration. Imagine a world where goods flow freely, unburdened by taxes and duties, fostering trade and prosperity for all involved. The promise is enticing: increased market access, boosted exports, and a surge in economic activity. But hold up, there's a shadow behind this gift, a potential pitfall lurking beneath the veneer of goodwill. In 2024, China raked in a staggering $62 billion trade surplus with Africa, a figure that raises eyebrows and warrants a closer look. What exactly are we trading, and who truly benefits from this exchange? The composition of our exports tells a revealing story. A whopping 82% of our exports were raw materials, the very building blocks of industry, the foundational resources that fuel economies. We're talking cocoa beans, not the finished chocolate bars that tantalize taste buds and command higher prices. Copper ore, not the sophisticated batteries that power our modern world. This imbalance raises a critical question. Are we simply exporting our potential, selling off our future for short-term gains? Are we becoming mere suppliers of raw materials, forever relegated to the bottom rung of the global value chain? The allure of immediate revenue can be tempting, but we must consider the long-term implications. What about value addition? The process of transforming raw materials into finished goods, creating jobs, and driving economic diversification. Are we missing out on opportunities to build our own industries, to develop our own manufacturing capabilities, to become masters of our own economic destiny? This isn't just about trade, it's about our future, our potential, and our place in the global economy. This zero-tariff deal, while seemingly beneficial on the surface, could inadvertently lock Africa into a precarious position, solidifying its role as China's quarry, not its equal partner. The removal of tariffs might encourage a continued reliance on exporting raw materials, hindering the development of local industries and perpetuating a cycle of economic dependency. We risk becoming perpetually reliant on China's demand for our resources, vulnerable to fluctuations in global commodity prices and shifts in Chinese economic policy. The Belt and Road Initiative, BRI, with its ambitious infrastructure projects, further complicates the picture. While these projects promise to improve connectivity and facilitate trade, they also come with strings attached. The Made in China stamps emblazoned on these roads, railways, and dams serve as a constant reminder of the source of funding and the potential for long-term debt obligations. Are we building infrastructure that truly serves our needs, or are we creating assets that ultimately benefit China more than ourselves? The subtle chains wrapping around these projects symbolize the potential for economic control and influence. We must be vigilant in ensuring that these partnerships are mutually beneficial, that they contribute to our long-term development goals, and that they do not compromise our sovereignty. The key lies in diversifying our economies, investing in education and skills development, and fostering an environment that encourages innovation and entrepreneurship. We need to move beyond simply extracting and exporting raw materials, and instead focus on creating value-added products and services that can compete in the global market. This requires a strategic approach, a clear vision, and a commitment to building a more resilient and self-sufficient economy. To understand the potential risks, let's look at Zambia, a nation rich in copper resources. In 2023, Zambia defaulted on a staggering $6 billion in Chinese loans, a stark reminder of the perils of excessive borrowing and unsustainable debt. The consequences were severe, impacting the country's economy, its social programs, and its overall stability. But the story doesn't end there. Zambia also lost control of some of its prized copper mines, a critical asset that had long been a source of national pride and economic prosperity. The sight of Chinese officials at the mine site serves as a poignant symbol of the shifting power dynamics and the potential for resource exploitation. This isn't just a Zambian story, it's a cautionary tale for the entire continent. It highlights the importance of responsible borrowing, prudent financial management, and the need to protect our natural resources from undue influence. We must learn from Zambia's experience and take steps to avoid a similar fate. This includes diversifying our sources of funding, negotiating favorable loan terms, and ensuring that our natural resources are managed in a sustainable and transparent manner. We also need to strengthen our regulatory frameworks and improve our capacity to monitor and manage debt. The future of Africa depends on our ability to learn from the past and to make informed decisions that prioritize our long-term interests. The case of Sri Lanka offers another chilling example. In 2017, after struggling to repay a $1.5 billion debt, Sri Lanka was forced to hand over control of the Hambantota port to a Chinese company. The port, strategically located on a major shipping route, became a valuable asset for China, while Sri Lanka faced accusations of surrendering its sovereignty. The handover ceremony, with its display of flags and official handshakes, masked the underlying reality of a nation struggling under the weight of debt. This debt trap diplomacy, as it has been called, raises serious concerns about the potential for economic coercion and the erosion of national autonomy. we must be wary of similar situations arising in Africa, where many nations are heavily indebted to China. The allure of infrastructure development and economic assistance can be tempting, but we must carefully consider the long-term implications and ensure that we are not mortgaging our future. The lessons from Sri Lanka are clear. We must prioritize sustainable development, responsible borrowing, and the protection of our national assets. We must also strengthen our negotiating capacity and ensure that we are entering into agreements that are truly in our best interests. With a staggering $20 billion plus in Belt and Road Initiative loans already extended across Africa, the question looms large. Is this a lifeline that will propel our continent to new heights of prosperity, or is it a leash that will bind us to a future of economic dependence? The infographic, with its ominous stacking debt blocks, serves as a visual representation of the growing financial burden facing many African nations. The text overlay, BRI loans, $20 B+ in Africa, underscores the magnitude of the debt and the potential risks involved. This is not a question to be taken lightly. It demands careful consideration, open debate, and a willingness to challenge conventional wisdom. We need to examine the terms of these loans, the projects they are funding, and the potential impact on our economies and our societies. We must also consider alternative sources of funding and explore innovative approaches to development. This is the debate you need to share, to discuss with your friends, your family, your community leaders, and your elected officials. The future of Africa depends on our ability to engage in informed and critical dialogue about these important issues. Let's not be passive recipients of aid or silent observers of our own destiny. Let's be active participants in shaping our future, ensuring that our partnerships are mutually beneficial and that our development is sustainable and equitable. The time for complacency is over. The time for action is now. Who wins? If Africa plays this right, Lagos's tech hubs and Nairobi's industrial parks could create over 1 million jobs, turning raw cocoa into global brands. But if we stumble, China's refineries could profit, while Africa's debt soars 50% by 2030. An African economist hails this as our industrialization leap, while a Western analyst warns of neo-colonialism 2.0. The power's in your hands. Will entrepreneurs seize it, or will raw deals dominate? Share this with your network to weigh in. This is no accident, it's a power play. China's zero-tariff move, announced at FOCAC 2025, is a direct jab at US influence. AGOA, America's trade lifeline since 2000, is fading, set to expire in 2025 unless renewed, leaving an $8 billion aid package dwarfed by China's $300 billion trade edge. With BRI pumping $1 trillion into Africa, this could shift alliances, especially as Sahel unrest grows. Is China outmaneuvering the US, or will Africa call the shots? This geopolitical chess match is too hot not to share. What's Africa's next play? By 2030, exports could hit $500 billion if factories rise in Accra and Nairobi. But infrastructure gaps, only 43% of roads paved in Africa, could stall this dream, risking a 50% debt spike. X is buzzing. At Africa Rising calls it economic freedom, while at TradeWatch fears debt disaster. The choice is yours, industrial powerhouse or raw material porn. Vote in the poll below and share this with every visionary you know. Africa stands at a crossroads now. Will China's zero-tariff gamble birth an economic empire, or entangle the continent in exploitation and debt? With $300 billion on the line and global powers watching closely, your voice can shape this story. Like and subscribe for more unfiltered insights, and flood the comments with your hottest takes and opinions. Share this with a friend who craves the truth, because together we're rewriting Africa's destiny. See you in the next Global Showdown.